and why they're important. So obviously we have, let me close that. So we have bullish trends, meaning a trend that is going up, and we also have a bearish trend, meaning trends that come down. So let me show you a quick drawing example. So how do we spot an uptrend, a bullish trend? We are looking for price to make higher highs and higher lows. So price starts here, we come up and we make a high. Price comes down a little bit and makes a low. And then price carries on coming up and it breaks the old high and creates a high here, meaning we have made a higher high. And then on this little leg down here, we make a new low. This low is higher than the previous low, confirming the uptrend. And then we come up again, we make a new high. This high is higher than the previous high. And we make a new low, which is higher than the previous low. And then finally, we make our high, which is higher than the previous high. So for a bullish trend to be confirmed, we need to be making higher highs and also higher lows. And then it's the opposite for a bearish trend, but I'll go over that in a second. So let's find some bullish trend examples. Let's focus here. Okay, so we're looking at this trend here. So let's get our drawing out. So we have our low here. Actually, let me start with our high. So we have a high here. And then, look, a low gets printed. Actually, that needs to be down there. So low, high. Come up, and oh look, we've made a new high, which is higher than the old high. Remember, we have to make higher highs and higher lows. And then where's our low? Here. This low is higher than the old high, than the old low, sorry. This low is higher than the old low, confirming the uptrend again. And then we come up, where's our high, where's our high, where's our high? Here we are, higher than the old high. Yep. And then come down and we make our low. This low is higher than the previous low. We come up, we come up, we come up, high. We retrace a little bit and we print a low. Then we come up again and make our new high. So you see, we have made higher highs and and higher lows. Higher highs, each high is higher than the previous high, confirming the uptrend. And each low is higher than the previous low. Each low is higher than the previous low, you see? So this is a great example of a classic uptrend or bullish trend or whatever you want to call it. It's an uptrend. So let me clear this stuff. And then we have downtrends as well, which is the complete opposite. So instead of higher highs and higher lows, we're now looking for lower lows and I should say lower highs. So we are looking for lower lows and lower highs. So we start up here and we've printed a low. And then we retrace a little bit and we make a high. And then now we are looking for a lower low to get printed. So we come down, we come down, we come down. We make our low. This low is lower than the previous low, confirming the uptrend. And then we have our little retracement. And then we print the high, which is lower than the previous high. You see? Lower than the previous one. Then we come down and we print a new low. Is it lower than the previous lows? Is it? I'll let you guys think for a sec. Yeah, of course it is. It's lower than this. You can see by the price on the right hand side over here. So this low is about 21359. This one is 22348. So this one's clearly lower. And then we print our high. Is it lower than the previous high? Correct. And then we print our low, which is lower than the previous low. Make sense? Super simple, guys. You're looking for lower lows, and lower highs. Let's find an example with the candlesticks. Let's use this bit. Okay, so we're focusing on from up here to down there. So we start up here and we print a low here. And then, so we come down, we retrace a little bit, print our highs, our high. Then come down, print a low. Is this low lower than the previous low? Of course it is. Come up, make our high. Is this high lower than the previous high? Is this high lower than that high? Yep. Then we come down, come down, come down. Make new lows here. Are they lower than the previous ones? Yep. Then we have an obvious high here. Is it lower than the previous high? Yep. Come down, come down, come down. New low. Is it lower than the previous one? Of course it is. New high. Is it lower than the previous one? Yeah. And then we make our final low. Is it lower than the previous low? Yes, it is. So lower lows and lower highs is what you're looking for in a bearish downtrend. And guys, remember, so let me go back up to the drawings. So this is the uptrend example. So we're coming up, so we're in a confirmed uptrend, let's say, and then you might be thinking, how do we know that it's not going to flip to a downtrend? Because look, price is retracing here. All it's doing, guys, is printing a new low for us. So we come up, price has to come down a little bit. When have you ever seen a trend ever that goes directly up? Never. There's always, price is always going to, let me get the drawing. Where is it? Price is never gonna, how do you draw? I don't know. You know what I mean, Mo. So price is never going to go straight up. There's always going to be pullbacks. It's always going to go up, down a little bit, up, down a little bit, up, down a little bit, up. That is just a classic trend. No matter what you're doing in life, there's always ups and downs in every single trend you will ever look at in your life. So these aren't massive retracements. All they're doing is printing a new low for us, and then the old low gets printed higher. So there's always tiny retracements. Don't think just because we're coming down a little bit that the trend's going to shift. I will teach you obviously how to tell when a trend is shifting from an uptrend to a downtrend or a downtrend to an uptrend, which is pretty simple. It's just, so basically if we're coming up here, we've printed our low, and then if price, so as price was coming down here, if we came all the way down and broke this low, that's when we'll be in a confirmed downtrend. But I'll do a separate video on those They're called break-off structures and market structure shifts. I'll do a separate video on that, but it's basically when the lows get broken in an uptrend. So if we came up here, so say we had this low, if we came up, say this leg here came down and broke this low, then we can say that price is shifting into a downtrend. And if we're in a downtrend currently, and we've got these highs printed up here, price comes down. If it's coming up and it breaks this high, then we can say that price has shifted into an uptrend. But because it is staying as a lower high, because it's lower than the previous high, we can say that's still in a downtrend. But if that high there gets broken, then it's no longer a lower high. It's a higher high because it's higher than the high, meaning we're now in a bullish trend, higher high. So if this low gets here, gets closed below from this price leg here, if that came down and broke this low, then we are no longer making higher lows. We have made a lower low, downtrend. So you see how a shift in trends is pretty simple, but I will do a separate entire video on that, so don't stress about that yet. Let me also show you. So if you are struggling with telling any trends, then change from candles to line, and then look how much more simple this is now. Because you haven't got loads of candles in your way, and we can easily tell that this here is a downtrend, because what we're doing, we are making lower lows, lower lows, lower lows, lower lows, lower lows, lower lows, and also lower highs. And same for an uptrend, we're making higher highs and higher lows, and higher highs. But yeah, you can change that to the line charts if you want to see a trend. But they're pretty simple to read. Just make sure that price is making higher highs and higher lows for an uptrend, and lower lows and lower highs for a downtrend. Price isn't always in a trend. Sometimes we have consolidation periods, like, let me find an example. Like here. So look at this whole range here. There's not really a clear direction of where price is going. It's not really making higher highs and higher lows, and it's not really making lower lows and lower highs. We're just consolidating. So price does this sometimes, and these are not the best conditions to be trading in because there's no clear direction, and you always want to be trading with the current trend. And if there's no trend, then how are you meant to know where price is going to go? And that's another thing, as you start to learn more and more about trading, and you start actually placing trades in the market, the first things you do are come to these higher time frames, so the weekly, the daily, the 4 hour, and you determine what trend we're in. So if we were looking for a trade right now, on the 4 hour time frame, we can see that we're bearish, we're in a downtrend. And you always want to be actually placing your trades within the trend. So if we're in a downtrend on the higher time frames, then I want to be placing shorts because the higher time frame is telling me that price is coming down. And if we're in an uptrend, then I want to be placing longs. I want to be buying the asset because I know that more than likely price is going to carry on coming up and not come down. So you want to be trading with the trend. The famous saying is, the trend is your friend, meaning you want to be trading with the trend at all times. Obviously, there are times you can catch moves with retracements. So, like I was talking about earlier with the, where are we? With the retracements. So in an uptrend, we will still have periods where we come down a little bit. You can obviously catch trades within that, but it's best to trade with the overall trend. So that would be an uptrend and a downtrend here. So yeah, when you load up the charts, I suggest you go and find a few examples of bearish trends and bullish trends. And you've also got to remember, so we're on a daily time frame right here, so each candle represents one day. However, if we go down to the 1 minute time frame where each candle represents 1 minute, we are in an uptrend. We're in an uptrend currently, but the daily time frame is in a downtrend. See, we're in a downtrend here, but on the 1 minute time frame, we're bullish. We're in an uptrend. So that's something else you need to consider. That is why the higher time frames hold higher power. Meaning just because the 1 minute time frame, each candle takes 1 minute to print. It's barely any time at all. Whereas these ones take an entire day to print. So which is going to hold more power? Of course, the daily time frame. So that's why you want to be trading with the high time frame trend. Because we could be bullish on the 1 minute. We're in an uptrend on the 1 minute, so I could be like, oh, I'm going to place some long positions here. And then what ends up happening? We carry on coming down. Why? Because the high time frames are telling us that price is bearish, and high time frames always hold higher power over every single lower time frame. So this daily holds more power than the 4 hour, 1 hour, 15 minute, 10 minute, all the way down to the 1 minute. So just because the 1 minute is bullish, that doesn't mean anything, because the high time frames are bearish, meaning we still want to be looking for short positions, because the 1 minute is going to have hundreds upon hundreds of different trend shifts per day. The uptrend, downtrend, uptrend. That's what you get on the 1 minute time frames, because the candles print so quickly. So you want to be sticking to your high time frame bias, which of course in this instance is bearish. So try not to get, I know most of you will not be at this stage yet, but do not get caught up in these low time frames. That's something I've struggled with before. I've seen, oh, on the 1 minute time frame, we're going up, we're in an uptrend. However, you then jump onto the hourly time frame and look how bearish we are. Why would I want to be longing? Why would I want to be placing any long positions in any of this? Because look how bearish we are. But I'd get so caught up in these lower time frames that I'd be like, oh, look, we're bullish now. Let me place a long. But then you go to the 1 hour time frame and you're like, why would I long that? Because we are clearly in a downtrend. Because you don't see anything when you're on the 1 minute time frame. You're like, oh, we're going up. But are we? Have you checked the 1 hour time frame or the 4 hour time frame? Because it looks like we're going down to me. So that's something I used to struggle with, getting caught up in these small time frames, because there's 100 different trend shifts in a day on the 1 minute time frame. However, on the hourly time frame, it may only be one or two. On the daily, there's only going to be one. So that's why the high time frames always hold higher power. So yeah, I suggest you just go and find some examples of your own, and of course, go in the questions section if you have any questions, and I'll be happy to answer them.